Hello friends, my name is Sahil and this is my Personal Finance Academy. Recently I asked about what type of companies you want me to cover for fundamental analysis. And 60% said that they want to know more about companies that are undervalued and where they can invest now. But friends, when the entire market is overvalued and Sensex is hitting 50,000, it is next to impossible to identify undervalued companies. The reason is simple. All the information about the company is available on public domain. So when the entire market is overvalued, it is because the good companies are already overvalued. And if a company is undervalued, then there should be a solid reason behind it. In fact, there are so many amazing companies that I intend to cover, but the majority of them are overvalued. So at this point in time, be very careful with your investments. Do not just invest all your money in small cap companies. They are very volatile. I always say that it is very important to build a balanced portfolio of large cap, mid cap and small cap companies. You can check my video on how I build my balanced portfolio. Having said this, today I am going to analyze another small cap company named IOL Chemicals and Pharmaceutical, that is IOLCP. IOLCP profits have jumped 365% in last 3 years. In spite of that, this share is trading at a dirt cheap valuation with a P ratio of 8. Now when the market is hitting roof, this particular stock is available just at a P ratio of 8 even though it has given great result in the past. At one side, it looks like an amazing opportunity to invest in IOL Chemicals and Pharma. But on another side, the question is, why is it available at such cheap valuation? Is there a catch? So I tried to investigate IOL Chemicals and Pharma. This is the 29th episode of Stock Fundamental Analysis, and as usual, we'll start with understanding IOL Chemicals and Pharma company and its business, its leadership, competitive strength, competitors, key risk, future growth prospect, and financials to decide if IOLCP is fundamentally strong or not. Then we will cover the valuation analysis to understand if it is worth investing in the company at current levels or not. But before I proceed, I want to clarify that my stock analysis is only for educational purpose. I don't give a target price, buy price or sell price because that is for short-term trading and I don't provide tips. I am here to empower you with right knowledge so that you can make an informed decision. In case you want to learn how to build the right investment portfolio and select the right stock, I have curated a complete course for you. Alright, let's get started. Incorporated in 1986, IOL Chemicals and Pharmaceutical is one of the leading API or bulk drug company and is a significant player in specialty chemical. API is basically your active pharmaceutical ingredient, which is the key component in any medicine. For example, if you take the painkiller, then it is the API in that painkiller that would relieve your pain. Its API portfolio covers various therapeutic categories such as your pain management, anti-diabetic, anti-hypertensive and anticonvulsant. For example, it includes ibuprofen, which is a non-steroidal anti-inflammatory drug mainly used to treat pain, fever and inflammation, and it is authorized with US DMF, that is Drug Master File. It is also certified with EU GMP, that is Good Manufacturing Practice, and likewise it is also certified by other organizations. Over the past few years, IOLCP has made significant investment in R&D and launched 6 new products in the API segment. For example, it launched metformin, which is the most prioritized drug for managing type 2 diabetes. IOL has filed this drug with US DMF. Then it launched clopidogrel, which is an antiplatelet agent used for reducing the risk of cardiovascular issues. Then it has launched a product called pantoprazole, which helps in reducing digestive disorder. Then it has a product named phenobirate that is used to reduce bad cholesterol and increase the good cholesterol in the blood. It also has a product in treatment of convulsions, treatment of bile from liver, treatment of hypertension and epilepsy. Ibuprofen is the flagship product of IOLCP and it is the only backward integrated company producing all intermediaries and key starting material, that is KSM of ibuprofen. It has a production capacity of 12,000 plus metric ton and has 35% market share in the world. I'm sure many of you would have heard about this drug ibuprofen. It is a very popular and commonly used drug. If you look at the chemical division, it manufactures ethyl acetate, which is a widely used as solvent for high resolution printing inks and laminated adhesives in all kind of flexible packaging and plastic films. It is also used as hardener in paint industry. It also manufactures isobutyl benzene, which is used as raw material for manufacturing of ibuprofen. If you look at the revenue breakup by category in Q3 of FY21, pharma contributed 59% in the total revenue and 41% was from the chemical segment. Within API, ibuprofen is the biggest contributor in the revenue and profits for the company with 47.9% contribution out of 59% revenue. It is followed with metformin. Likewise, within chemical, ethyl acetate contributes the most with 32% contribution out of 41% contribution from chemical division. If you look at the revenue breakup by geography, 66% consumption is domestic and 34% is export. If you look at the leadership, Mr. Varinder Gupta is the Managing Director of IOL and has a wide and rich experience of more than 35 years in the chemical and pharma industry. Mr. Varinder Gupta has a son, Mr. Vikas Gupta, who is the Executive Director of IOL and has completed his studies from Kingston College, London and has been associated with the company for the last 7+ years. So he is the next generation leader for IOLCP. As of today, the market cap of IOLCP is somewhere around 3,600 crore. So it is a small cap company. Overall, on company's business, product portfolio and leadership, I would rate it 10 on 10. If you look at the competitive strength, first strength of IOL is that it is the largest producer of ibuprofen in the world and is the only company worldwide being backward integrated with 35% global share. Due to that, it enjoys economy of scale. Next strength is its experienced management. Then, its product has a global reach in 80 countries of the world. The biggest risk with IOL Chemical is high dependence on ibuprofen and ethyl acetate. If you look at the share price of IOL Chemical in the last 5 years, it fell down from highs of Rs 155 in September 16 to level of Rs 48 in October 2017. Then it zoomed 18 times in the next 3 years. But again, since August 2020, the share has fallen to the current levels of 620 by May 2021. So the most important question is, why the share price is so volatile? The reason is due to over-dependence on ibuprofen and ethyl acetate. Almost 80% revenue of the company is from ibuprofen and ethyl acetate. And during 2016 to 17, the prices of ibuprofen fell down drastically. However, the raw material price did not fall. Due to that, company's profit fell down significantly and company reported losses in 2015 and 16. Eventually, the share price tanked. So basically, IOL Chemicals do not enjoy pricing power on ibuprofen. However, in 2018, BASF, which is the world's largest chemical producer from Germany, had to shut down its ibuprofen plant in USA, and that resulted in high demand and low supply. So prices of ibuprofen skyrocketed. On top of that, due to COVID and supply chain disruption in China, there was more demand for ibuprofen and this eventually resulted in high profit margin for the company and share price skyrocketed during 2017 till August 2020. So basically the biggest risk with the company is revenue concentration risk, which IOL is trying to de-risk by diversifying into various other product segments. This is the reason they launched multiple products since 2018 and a lot of products are in the pipeline. If you look at the competitors, again its competitor would vary across geography and across pharma and chemical business. In ibuprofen, IOL Chemical has competition from Vinati Organics, Stride Pharma and Solara Active Pharma. Then in ethyl acetate business, it has competition from Lakshmi Organics, Jubilant Life Sciences and Gujarat Narmada Fertilizer. Since IOL Chemical do not have control over the pricing of ibuprofen and its business vary a lot due to fluctuation in the pricing, hence on competitive strength, I would rate it 6 on 10. If you look at the future growth, the biggest trend in pharma sector is growing lifestyle diseases. With almost 500 million people suffering from diabetes, there would be a growing demand for anti-diabetic drugs, and IOLCP has a product in this category. Heart-related problems are also getting very common, and as per WHO, cardiac disorder account for 31% of all deaths each year. IOL has a product in this category as well. Then digestion-related disorders are common, and the company has product in this category. Company has recently launched 6 products that we discussed earlier. In addition to this, it is also planning to launch 12 new products. For example, it includes fexofenadine, which is used for treatment of allergies. Then quetiapine fumarate, which is used for psychotic disorder like depression and Alzheimer's disease. Then dextromethorphan, which is a cough suppressant, and many more products. The global ibuprofen market is expected to record a steady growth over the coming years, backed by various factors driving the growth in this market, such as increasing diseases and rising awareness about this drug and its effectiveness. IOL has commissioned a separate facility to manufacture ibuprofen derivatives with a peak capacity of 500 metric ton per annum. It is also planning to enter into Japanese market. On top of that, India is the largest provider of generic drugs globally. Because of low price and high quality, Indian medicines are preferred worldwide. And if you look at the chemical sector, India is one of the oldest industry and is the 6th largest producer of chemicals globally. Due to shutdown of various chemical facilities in China and companies trying to reduce dependence from China, there is a new theme which is China Plus One. And this would create more demand for chemicals in domestic as well as global market. Overall, there is a huge demand in both pharma and chemical sector in India, and IOL is gearing up for the next phase of growth with multiple product launches in pharma sector and high demand from chemical sector. Hence, on future growth prospect, I would rate it 10 on 10. If you look at IOL revenues, they have consistently grown from rupees 387 crore in March 11 to currently at 1948 crore by December 20, although there was a slight dip in March 15. Its 10-year CAGR growth is 18% and 5-year CAGR growth is 38%. IOL profits have gone down from 6 crore in March 11 to minus 60 crore in March 15. This was due to low pricing for ibuprofen, which impacted the company's profitability. However, since 2015, company is consistently doing well and the last 3-year profits are phenomenal. Overall, its 10-year CAGR growth is 43% and 5-year CAGR growth is 49%. Overall, the revenue and profit growth is very good, but since profitability is not consistent, I would rate it 7 on 10. Its operating profit margin has improved significantly and recent operating margin is 32%, which is fantastic. Although it was mainly due to high demand for ibuprofen due to closure of Chinese factory and BSF plant in US. If you look at the ROE and ROCE, there was a major fall in March 15 and 16. But since then, the ROE and ROCE have improved exceptionally. Currently, it is 42% and 53.8% respectively. Again, the profitability movement depends a lot on ibuprofen pricing and hence it is not very consistent. Overall, on profitability, I would rate it 7 on 10. If you look at the debt to equity structure, company has significantly reduced its debt and currently it is almost debt free. Hence, on debt to equity, I would rate it 10 on 10. Its reserves have increased from 140 crore in March 11 to currently at 1036 crore. Company is cash rich with a total cash balance of rupees 281 crore by September 20. If you look at the promoter shareholding, promoters have increased the shareholding in the company from 41.19% to currently at 43.69%, which is a good sign. FII have increased their shareholding significantly from 0% to 6.47%, but in the last few quarters, they have reduced the shareholding to 5.96%. DII have almost negligible shareholding in the company, which is also due to the fact that it is a very small company. In the last 1 year, IOL Chemicals share price has increased from the lows of rupees 300 to high of rupees 899, and currently it is trading at level of rupees 620. It has a face value of rupees 10. At current level, it is available at a P ratio of 8. Now when the growth prospect of the company is so bright and the revenue and profit have increased substantially, the profitability is amazing, then why company is trading at a low PE multiple of just 8? The reason is that in the short term, there could be a fall in the profitability of the company. One of the reasons is BASF earlier announced the scaling up of facility in Germany. However, company representatives said that they don't foresee any oversupply of ibuprofen in coming 1 to 2 years. However, they agreed that in the near term, there would be a correction in the pricing of ibuprofen, but they expect 30% growth in ethyl acetate business and they are targeting a growth of somewhere around 15%. Now I think that even if there is a correction in ibuprofen pricing, which could impact its margin and profitability, I think overall company would do well on account of growing demand from chemical business. And in the long term, company is diversifying its product portfolio with various APIs for lifestyle related diseases, and that's where I think that IOL has a bright future, and at current level of P of 8, IOL Chemical looks like an undervalued company. Overall, if we conclude, IOL Chemicals and Pharma is in the business of API manufacturing and chemical sector. Both the sectors have high demand and bright future growth prospect. Company has recently launched multiple products in last couple of years, which will grow in the future. And there are already multiple products in the pipeline. Eventually, IOL would reduce its dependency from ibuprofen. As far as financials are concerned, they have been volatile in the past. The revenue, profit and margins have fluctuated a lot due to overdependence on ibuprofen. However, IOLCP financials are looking extremely good in the last 3 years. It has almost become a debt-free company and has a good amount of cash to fund its future growth. Hence, IOL Chemicals and Pharma looks like a fundamentally strong company, and at a P ratio of 8, it looks undervalued to me. Although, since it is a small company, share price can be volatile in the short term. So please be very careful. But I think that in the long term, this stock should give a very good return to the shareholders. I hope you will find the analysis useful. And if you also want to learn how to analyze stock like me, do check out my complete course on money management. I will see you with another video. Till then, take care.